But how many assets did you have under management?
We were at $1 billion in invested capital when we.
Okay.
Which also, I mean, coming back to your argument about it's a lot of money to throw around. By the way, I met him through a weird set of coincidence when I was just out of business school. Very funny.
Oh, you met Jordan Belford?
He interviewed me. I didn't even know it was him. But he wasn't really a hedge fund, by the way.
Hey everyone, Ben here and welcome to Motivation to Invest. Today we're going to be joined by a legendary former hedge fund manager, Lars Kroijer, and he's also the author of 2 books on investing. We've got Investing Demystified and Confessions of a Hedge Fund Manager. So Lars is incredibly well educated with an MBA from Harvard Business School. And in this video, Lars is going to give us some insight into what it's like managing a hedge fund and hopefully some investing tips to help you guys get great returns in the market. Why don't you tell us a little bit about your background and why you got started investing? What was your motivation to invest?
Well, my background, I'm Danish, but I haven't lived there for over 30 years. So I went to school, undergraduate and graduate school in the US at Harvard, and ended up on Wall Street. Frankly, originally because I had a lot of debt from university and they paid really well. So I ended up working as an investment banker for a short while. And then after business school, it's really when I got into investing. Originally, I had looked at doing private equity because I did my internship in private equity, actually in London, funny enough. But I ended up choosing hedge funds because I took the view, a bit silly in hindsight, but that if you worked in private equity on many portions of investing, the overwhelming driver of how well you did was dependent on something that you really had no insight into or control over, namely the movement of the markets. So I thought if you invested in even a real estate investor, but also private equity over a 10, 15-year horizon, first of all, you did fairly few transactions. And second of all, if the world economy went to shit, then that was going to be a major driver of your profitability in the coming decade. Meanwhile, in hedge funds, it's sort of in the term, right? You could hedge. So your ability to perform was not depending on any one thing, because whatever you didn't understand or didn't like, you could hedge and make go away. The reason I say this is a little bit silly was I graduated business school in '98, which was the beginning of the internet boom and one of the greatest bull markets in the coming decades. So, you know, some of my best friend in the world is president of one of the world's largest private equity firms, and you know he's done okay as well, right? So it's not it's not like that was necessarily in hindsight the most clever choice. But yeah, that's how I ended up in hedge funds.
That makes so you got into hedge funds just as the .com bubble was sort of just about to peak. Is that right?
Yeah, I'm the guy who, imagine you graduated Harvard Business School in '98. It just, if you look at the number of people from that era that went to Silicon Valley and later did phenomenally well, been one of the greatest things of my career is to be close to a lot of those folks and see how they operate and frankly learn from it and contribute to it.
Do you have any tips for anyone who'd like to start maybe a hedge fund or start managing money?
It's a bit like when you write a book, frankly. Everyone says, oh, I want to write a book. If you run a hedge fund, everyone says, I want to run a hedge fund. So let's say, what does it take to start a hedge fund? Well, what is a hedge fund? It's an investment fund. It's a pool of assets, right? So the reason it's called a fund is because there is a fund sitting somewhere. And I know you're in Manchester, but let's say, how would you run a hedge fund? If you want to start a hedge fund right now? Well, first of all, you'd have to go get regulated in the UK by the Financial Conduct Authority. And that's for good reason. That's serious stuff, right? And then you have to set up this fund. But when you think of where is the fund, well, it depends a little bit on who are your investors. Very often, hedge funds sit in one of these tax exile places, Cayman Islands, BVI, places like that. And people naturally associate that with something dodgy. That's not the case. It's because that is, think of it this way, that's where investors from all over the world can put the assets and only be taxed while they take it back to one of their. If you have an investor from Brazil, well, it's easy for that investor to invest in a Cayman Island fund than into a Manchester fund. The reasons we can go into. But then what you sitting in Manchester do, you're actually an advisory business that advises that fund that's in Cayman Island.
Okay, makes sense,
Does that, right? So in a sense, and for that, you get paid a fee. So that's where you make big bucks, right? So what do you need to do that? Well, so you set up this fund, and there are about 1 million people that wear expensive suits that can help you that for a large amount of money. But then the real trick is, can you get anyone to invest in your fund? What do you plan to do?
Yeah.
How are you going to convince people? How are you going to convince them you're not just the next asshole who's trying on a get-rich-quick scheme, which a lot of people are? Yeah. How are you going to cover all those costs that you're not going to have covered by your investors? And it's substantial.
Yeah.
And then once you get all of that together, then you actually got to invest the money, and then you use the returns from those investments, hopefully, to raise more money. And if you do it successfully over quite a while, you can eventually run a ton of money and be very, very successful. But failure rate is very high. Hedge funds, like many other businesses, are, we tend to talk about the winners. We tend to talk about the Tiger or the Citadels or the whoever they are. And we sometimes forget that there are perhaps 10, 12,000 hedge funds out. There might be 500 that have done really, really well, and 50 that have done astronomically well, right? And a lot of those guys, they started out tiny. So what do you need? You need some money to set up the fund and all the expenses associated with it. Then you need some investors. Then you need to go invest that money and produce returns. And for that, you'll get paid incredible fees if you do really well. And then, yes, you can go buy that yacht if you. That's what makes you happy.
I feel even to be a great investor, if you're really motivated by materialistic things and you're not just motivated by the actual act of doing the craft of investing, then I feel your returns will be less, most likely, from just a lot of the great investors I've studied. Like, even if you look at Warren Buffett, how he lives, and he still sort of studies companies and invests and sits there, it's the same house, same car, goes to McDonald's, get his McDonald's breakfast. Like, he's very humble, really, for somebody who's worth billions. Misconception, really, with a lot of hedge funds, and you see like Wolf of Wall Street. And
by the way, I met him through a weird set of coincidence when I was just out of business school. Very funny.
Oh, you met Jordan Belford?
Well, he interviewed me. I didn't even know it was him. But he wasn't really a hedge fund, by the way. First of all,
he's a brokerage, wasn't he?
Yeah, and a fraud, right? Let's not forget.
Yeah.
But look, I think, first of all, hopefully, successful hedge fund managers tend to be well-informed, well-educated people. And hopefully those people have choice in their careers. They don't have to be hedge fund managers. Those people that choose to be hedge fund managers do it for the love of the work, because they had also. It's certainly, I agree with you very, very much, that the people that do better in the long run are the ones that just love the work.
Yeah.
I mean, Warren Buffett could have stopped investing money probably 50 years ago, and he could have lived the lifestyle that he lives. Right?
Yeah, exactly.
And so a lot of those people could have stopped running money when they were 30.
Yeah.
They just love what they do. Some of them probably also caught up in the rat race. The ones that I know that have done the best, they just love it. They get up Saturday morning and they wish the markets were open. When they go to the beach, they bring an annual report.
Yeah.
They're the kind of people where if you have dinner with them, they can't shut up about trades.
Yeah.
Or positions.
Yeah.
Reflective on my own career, I didn't love it as much as those guys.
Yeah.
One of the reasons it was so easy for me to walk away.
Yeah.
And also one of the reasons why the very first thing I said was it was interesting because I graduated from a prestigious school at a time of beginning of a great run, sort of suggesting, well, maybe I shouldn't have done it, right? So it's kind of, you compare that to people that just live and breathe investments.
Yeah. With your fund, let's go back to your fund then. But how many assets did you have under management approximately?
Well, so we were at $1 billion in invested capital when we.
Okay.
Which also, I mean, coming back to your argument about, it's a lot of money to throw around.
Cheers. That's been great stuff. Comment your thoughts below, guys, if you have any thoughts, any questions for Lars, because we'd love to hear from you guys. If you did find value in this video, feel free to give it a big thumbs up. And with that being said, if you haven't joined the investing family yet, feel free by hitting that subscribe button, turning that notification bell on. First link in the description below for our VIP membership group and also our ultimate investing strategy course. And with that being said, thank you guys so much for watching. I hope you all have an incredible day, and I'll see you in my next video. invest safe.